Folks, welcome to Best Stock Charts for the coming week. This is Bob Desmond, and what we're going to talk about today is A, how was our week last week? How did we do? B, we're going to talk about the stocks that we're watching for the coming week. First off, let's talk about how we did last week. Well, we did fairly well, especially relative to the rest of the traders that were out there that were buying up Tesla, Apple, all that hype, and we were warning, beware. Beware of the hype of the stock splits, that it wasn't going to end well. We'll go over those charts in a moment, and I'll show you what happened immediately following the splits of Apple. First off, how did we do last week? We went into the week short. We did add to shorts on the spike up in the triple Qs. We shorted the triple Qs using a leveraged ETF called the SQQQ. We also booked profits on Canada Goose Holdings. That was a long trade. We made those profits real because I was concerned about the markets being a bit extended and that we would get a correction. How did I know? How did I know that there was going to be a correction with all the hype that was surrounding Apple and Tesla? Stocks are going to go to the moon. The Federal Reserve had our back, yada, yada, yada. How did we know? We simply used the charts. And we knew a week before the stock market corrected that there was going to be a correction. And how do we know that? We use the charts. And as I always like to say, the charts and the market send you signals. Now you can either pay heed to them, position yourself, or you could ignore them and then pay the price. Here's what I had to say last week to members on the week ahead commentary, which is already posted in the members area for this week. Here's what I had to say to members last week. Take a listen. The VIX. I guess the best thing that could be said about the VIX, viewing the market through the lens of a net long, was that we closed off the highs of the week. Now, were I net short, I'd be saying, Jesus, while we closed off the highs of the week, we closed up on the week along with the S&P 500. Not only that, the prior week, we closed up. This is the S&P 500. We closed up on the VIX last week with the S&P 500 up. The prior week, we closed up with the S&P 500 up. Back to the VIX. This could be an ominous sign here, folks. But as I've been saying recently, I don't expect a huge market crash before the election. We have 2 months to go. The S&P 500, new all-time highs. Volume rose versus the prior week. Let's go to the daily chart. RSI near 80 on the S&P 500, folks. Yet it appears as though we're going to go up higher. But expect a brief correction fairly soon to take this froth off. The Trip Q leadership names, of which we are short. As a reminder, I haven't spoken about it much, but we did open up a short position. We were up last week on volume. MACD picked up steam. We were talking about this last week. We were losing some momentum. It regained momentum last week. RSI weekly basis, 77.02. It can go higher. Daily chart. We stalled out a bit last week. No new daily high on Friday. A reversal, not quite a full reversal. We faded on Thursday. Up volume, very light on Friday. Let's take a quick peek at a intraday chart. Let's go with a 2-hour chart. This is a consolidation. If I had to hazard a guess, I think we pop higher on Monday morning. I would love to say that we're going to get a pullback here, given that we have a short position on the Qs, but we don't speak our book. This appears to be a solid consolidation. My guess is we pop. The question is, do we fade? So as I mentioned, going into the week, I was concerned about a correction. And here's how the VIX played out. The VIX is a very, very important indicator and not respected by enough younger traders. We spent our third week up. We spent 2.5 weeks of the S&P 500 and the VIX trading in tandem. That's not supposed to happen. What do you read into that? How I view that is that while, yeah, you have institutional money out there and they're holding the S&P 500 up and they're holding stock to the long side, they're using trailing stop loss orders and ready to get taken out really, really quick. And they have insurance policies that they've been building buying VIX contracts. So when I see this divergence, or I should say convergence of price action of the S&P 500 here where we were trading up week 1, week 2, along with the VIX, we knew it wasn't going to end well. Add to that, they were pumping up the charts of Tesla, and as such, they were moving the mega caps higher. Here's Tesla. I mentioned on the week ahead commentary last week to members, which I just played, I expected a move higher going into the week, but I was worried about a fade, and we took advantage of the rally early on in the week to add more aggressively to our short trade. And take a look at Tesla. Outside reversal week. Think about if you would have bought Tesla on the stock split Monday the 31st. You would be down in a very big way on that trade. And I've been warning for weeks, beware, it's hype. All they're doing is hyping the stock. And what did they do? The first people to sell? Tesla. They issued $5 billion worth of new shares, thus diluting current shareholders. The next chart up, Apple. Here's the split on the 31st. They rallied it. Look at where you'd be sitting right now if you would have bought and held on the split. This is the hype. This is the game that Wall Street plays. And this is why I don't listen to them. I use them as a contrarian indicator. What I do is I look at the charts. What was the VIX doing relative to the S&P 500? They were trading in tandem. They're not supposed to do that. And when you take a look at the triple Qs, well, you know what? Let me play you a clip from last Saturday's The Week Ahead commentary and what I had to say about the triple Qs. The trip Q leadership names, of which we are short. As a reminder, I haven't spoken about it much, but we did open up a short position. We were up last week on volume. MACD picked up steam. We were talking about this last week. We were losing some momentum. It regained momentum last week. RSI weekly basis, 77.02. It can go higher. Daily chart. We stalled out a bit last week. No new daily high on Friday. A reversal. Not quite a full reversal. We faded on Thursday. Up volume, very light on Friday. Let's take a quick peek at a intraday chart. Let's go with a 2-hour chart. This is a consolidation. If I had to hazard a guess, I think we pop higher on Monday morning. I would love to say that we're going to get a pullback here, given that we have a short position on the Qs, but we don't speak our book. This appears to be a solid consolidation. My guess is we pop. The question is, do we fade? So fast forward to that very same 2-hour chart, and you can see this is the consolidation I was mentioning. We did gap up higher, but the word I used, or the phrase I used, was beware of the fade. And we got it. Here was the fade. And we shorted more into this rally. How did we know it was going to be unsustainable? Very easily. Go to a daily chart of the triple Qs. Hammer formation on the 3rd of September. I saw this formation. I said, I have to get aggressively short. RSI at that point in time. Oh, by the way, a hammer formation is a sign of indecision when you're at the top of a trading range. Not quite as strong of an indecision bar as a doji star formation or a filled candlestick, but an indecision bar nonetheless. So I saw this along with RSI greater than at time 80. Add to that, you have the S&P 500 with RSI just shy of 83. And when you took at the XLK, which is the technology ETF, that sucker had RSI above 83. So I knew that when I saw this indecision bar, that this was unsustainable and that we would correct. And it did correct. We used the SQQQ and we sold the rally. Now, I didn't spend all of Friday short of the market. I spent more time on Friday looking for bargains, looking for opportunities. One of them I'm going to talk about in a moment, and I'm going to play you a clip of what I was expecting to see on the stock chart on Thursday evening, on Thursday Night Stock Charts Live. I'm going to replay you that clip. I'm going to show you exactly how it played out on Friday. That's the chart of Boeing. So last week, a good week. We added to our positions. We expected a rally in the banks. How do we know that? Well, we know that the tech-heavy NASDAQ was very overbought and that the trip Qs were long in the tooth. We also knew that we had a breakout on a weekly basis on the 10-year yield. And banks do well in a rising interest rate environment. You may be asking why. Why would that help them? It's called NIM, net interest margins. They have a greater profit margin on their loans. So they make more profit on their loans. So that's why you saw the regional banks up last week. Here's the regional bank ETF, the DPST. It was up 4.84%. The XLF, while down on the week, it was down 0.28% versus the S&P 500, which was down over 2%. So you could see that the banks outperformed the overall market. And we were buying the banks. We were buying mortgage holders while the market was in free fall. So it was a good week in terms of scalping a profit to the short side and then adding at lower prices on positions that we wanted to open up and add to. So let's go to the stocks that we're watching for the new trading week. Now for this segment, we're going to be using TrendSpider. They're our business partner and we are an affiliate. There's a link below, 35% off. Take advantage of it. The next generation in automated technical analysis. And to the chart of Boeing, here's what I had to say on Thursday evening about what I wanted to see before I opened a position on Boeing. All right, what else do we have? Boeing. Okay. I want to get back into Boeing. We sold it at 204. Nice profit. We haven't been in it since. We've been using the 179.41 mark as an entry point and another entry point at 189.86. Thus far this week, we are down right at support. I think I have an alert. This is the one that fired off today. Where's my alert? It fired off today. Here we go. 3 hours ago, Boeing hit support. All right, let's drill down into this. Yep, there it is. So I had it set up for a weekly time frame. We're right there. Let's see how we closed out the day. It was not wonderful. Right down into support. I mean, how I would trade this one is if they gap it down tomorrow and then they manage to flash a bullish key reversal and close it back above, let's call it 169.30, I'm in. I would get in at that price point and on that price action because, again, I believe that the mega cap, Dow names, those are going to be the names that are going to come back to life, especially if we get a good jobs number tomorrow. Those are the names that are going to come back to life. So fingers crossed. Hopefully we see that price action. I can't buy it just yet. I need to see a bullish reversal bar, and we don't have one yet. We have quite the opposite, a ton of resistance above, and hopefully some support below. So I would wait. The market's going to send us a signal. HTLB. So here's the chart of Boeing through Thursday, as I just showed you on that clip. But what we were looking for was a lower low and a reversal. That's exactly what happened. We gapped down, then we rallied back. Did we close positive? No, we did not. But this was enough to tell me that this lower band of support here was sufficient enough to act as an area where I could get long using a stop loss right below. And then what I want to do is I want to start adding more on strength. As we begin to rally through these resistance levels, we're going to be building on our position because our bet is that the Dow Jones Industrial Average, those names that have been beaten up for several months now, they're going to begin to lead the market. You may be saying, that's crazy. Well, is it crazy? Think about it. On Thursday and Friday, you had Carnival Cruise Lines up. Think about it. The stock market was down. CCL was up. What else? The airlines. Here's UAL. Up on Thursday, up on Friday. The airline index was up overall. There was some that were down, but not by much. So the airlines holding gains, making gains while the stock market pulls back. And I've been saying for weeks now, I'm not expecting a stock market crash through the election. I'm expecting sector rotation. And we're beginning to see it. And it's showing up in our portfolio. So if you're not a member, join up. And you get TrendSpider for free if you're a silver or gold level member. What other charts are we looking at? I ran some scans. Exxon Mobil. I've spoken about Exxon Mobil. I think it's going to be a dog of a Dow. It's yielding right now 8.9%. I'd like to see it make lower lows. I have alerts set up here on TrendSpider to alert me when we hit this lower band of support here. I don't know if we're going to get there. So what I want to do is I want to create a new alert because I was kind of impressed with the way that Exxon Mobil held up last week. Remember, Exxon Mobil was thrown out of the Dow Jones Industrial Average. Think about that. For you guys my age group and older, you can appreciate, wow, what Exxon Mobil once was in terms of market cap. It was massive. It's still massive, but relative to other names out there in technology, it's nowhere near its former glory. So I'd be looking for a breakout on Exxon Mobil, and this would be a long-term hold. It's paying nearly 9% dividend, and there we go. What else are we looking at? And I do a deeper dive on these charts with members on the week ahead commentary. So if you join up, there's a lot more detail on the analysis. I'm just doing a cursory overview right now. Rocket Mortgage. We opened up a position. I'm going to be looking to add more here. We bought it on the dip on Friday, and you could see that it held support. My alert had fired off. Oh, going back really quick, I'll come back to Rocket Mortgage. XOM. I want to point out to you something. This is a functionality in TrendSpider you're not going to find in many other charting software by a click of a button. August is a horrible month for Exxon Mobil. This goes back 33 years worth of data. September, up. This is seasonality, okay? Up only 21% of the times in the month of August, up normally 52% of the times in September, and then it rises in October. And then in December, it's up 72% of the time. Think about it. Powerful data. Click of a button. So Exxon Mobil, we're very excited about, but it's still weak. If you take a look at it on a weekly chart, it's still weak. I just can't go jumping into it just yet. Back to Rocket Mortgage. Now, Rocket Mortgage, we have to go to a daily chart. There's not much data here. But what I like about Rocket Mortgage was that it rallied back to close above support. We're going to be looking to add more here. Why? People are fleeing the cities. Also, if you take a look at yields and that the fact that they're breaking out, but still at historic lows, you're going to see a flood of people trying to take advantage of yields as they proceed higher. That's only going to cause more business to come Rocket Mortgage's way. And they had a good earnings report. So we're long of Rocket Mortgage. We're going to be looking to add a lot more. What else are we looking at? Discovery. Take a look at the price action last week on DISCA. This is beautiful price action. We closed up on the week while the S&P 500 and the Russell 2000 were down. Now, am I ready to buy just yet? No. What am I looking at? What's my concern? Here's the value of automated technical analysis. Over here, press a button, trend lines, boom. It's telling me that right down here, I have support. So I want to know if we pull back next week and we retest this lower band of support, I'm a buyer. Why? Because my risk reward is favorable. Because I know if I close out the week below this lower band of support, I want out. We nibble at support and then we stop out if we're wrong. When else do we want to either open a position or add? We want to do it on a breakout. We want to buy strength. Why? Because our analysis was accurate. The market is validating that we were correct in our thesis or hypothesis. Now, what's good to know here is that in the month of September, while not the best month of the year, we usually close up 56% of the times. So that's pretty good. So good for a trade. So our alerts are set. We're going to allow TrendSpider to do the work for us. We're not going to sit and stare at our computer waiting for something to get hit or this to do that. We're going to get alerted because we approach the markets from a rules-based approach. If we believe that the path of least resistance for the overall market is to the upside, which it still remains, yes, we're going to see volatility. It still remains up for now until after the election. That's a different story. But we want to wait until our alerts are hit so we don't get whipsawed in and out of trades. That's how you lose money. You don't want to get involved with that. Rules-based approach. So, folks, I would strongly encourage you, please, if you're not currently a member, please join up. In the members area right now is the week ahead commentary where I do my analysis of the overall markets. Where do I believe that we're going? And the charts I've just reviewed, I do a greater deep dive into the daily charts, weekly charts, etc., and strategy. And then I also review our positions. Do we want to buy more? Are we satisfied? Do we want to lighten up, etc.? If you're not interested in joining up as a member, that's fine. Remember, silver and gold level members get TrendSpider. If you only want TrendSpider, that's fine as well. Use the link below. Get 35% off using the link below and my discount code. And join us on Monday night. We're doing Monday Night Futures Live rather than Sunday, given the Labor Day holiday weekend. There's a link below. Enter your email address. You'll get alerted 15 minutes or a half hour prior to us going live. If you're already on our email list, don't enter it again. You're going to get alerted anyway. All right, so I don't want to think you're getting spammed. And that is it. Everybody have a great Labor Day weekend. You earned it. Relax and have a very, very profitable trading week. Be well.